In today's weekly Forex forecast, we're talking about the DXY, the euro, the pound, the dollar versus the Swiss franc, and also gold, following those non-farm payroll numbers, which were bad to say the least. And we are seeing the US dollar rotate lower today, so we'll have all the details as we head into next week, key levels to watch, and also some setups to watch out for as well. Now, if you guys want my help with your trading, including real-time market updates, seeing my trades live, VIP-only videos, and the full course, check out the link in the description of this video for 85% off lifetime access to Discord. It's all real-time, guys. I'm in there every single day helping out members. All right, so looking at the DXY daily time frame. So we just had non-farm payroll numbers, guys. There are still a few hours left in today's session as I'm recording this, so keep that in mind when you're watching this. However, so far, the US dollar, guys, pulled back significantly. Now, the benefit of being in Discord is that I do, talk with members in real time. And what we discussed here before that NFP was the fact that 100, okay, this level here was a big retest here for the DXY, to the point that I even said on Thursday that I was leaning toward a pullback from the DXY and a potential failure down here around 99.35. So obviously we're seeing that here today, the start of that here today, following a very bullish July close. So let's talk about that here first, because the monthly time frame just closed. And despite the fact that we are seeing a very aggressive pullback here today, keep in mind, guys, that this candle here in July closed as a bullish engulfing candle. Now, whether or not this confirms will depend on where August closed. If August closes up here above the close from last month, then of course we have a confirmed pattern. So just keep in mind that this does look pretty bullish here for the DXY so far. But without confirmation this month, it's really going to be a little bit up in the air here for the US dollar. And keep in mind too, guys, that we talked about this before, but 100.8, even if we do see a DXY rally from here, this is going to be an incredibly significant area here on the monthly time frame as well. Okay, so I wanted to start here because this is kind of giving us context for this pullback. Again, the DXY in the monthly chart does look relatively bullish following last month's close. Okay, now look at the daily time frame here. We have the market breaking back below 99.35. Now, this is a level that we talked about recently. You can see all the highs back here. We had the close above here on two candles. And of course, those non-farm payroll numbers on Friday disappointed. And we are seeing the US dollar rotate lower and breaking back below here. So in line, guys, with what I teach in the course, this right here would be a failed breakout. Okay, so a fake out here from 99.35. And that means that if we flip to the 4-hour time frame going into next week, we have a pocket of resistance up here for the DXY down here at 99.35, those June highs, also the top of that channel we've discussed. And we also have this low from right back here, giving us an area to keep an eye on for next week, early next week, between 99.35 and 99.5. This is going to be your resistance if we get the sustained break below today, which, so far it looks like we will. Not much of a bounce here from the US dollar at all. And then we have support coming in down here at 98.50 or so. All right, so 98.50, 98.60, this is going to be your support pocket down here. And below that, we do have a single print or imbalance down here at 98.46. Now, the reason we get this is because you can see through here, the market spent very little time trading through here. This is also just below that support area. So I would expect a sweep down here in this area early next week. Okay, so this is going to be support, guys, resistance up here in this area. Below that, though, we do have two imbalances down here in the 97.70 to 97.90 area, which could also become a factor following this failed breakout here from the DXY. So if we get follow through to the downside next week, guys, and 99.35 toward 99.5 holds up, then what we could be looking at here in the context of this ascending channel. All right, so we've discussed this before, but you can see that off of these highs and lows, we do get this parallel channel. We've now had a fake out above. So if this area holds up for the DXY, again, you've got support down here to be aware of. However, you also have this confluence of support down here that's very close to those two imbalances down there toward 97.70. Okay, so what we could see here is possibly, a move down here toward next week or up here first, right? This is going to be your range early next week. If this holds up, though, up here, guys, like I said, we could get that rotation lower into mid-August to come down here and clean up those imbalances around 97.70. Okay, so that is one scenario, guys, following today's failed breakout here in that 99.50 area. Okay, so keep this in mind, guys, as we go through the other charts, because this is really going to play into the euro, the pound, the dollar versus the Swiss franc, and also gold. All right, so that's what I'm looking for here. Obviously, if we were to get the DXY closing back above here early next week, and especially above the top of this channel here, then that would be bullish toward 100.8. But right now, guys, this does look like a failed breakout here from the DXY. All right, looking at the euro, let's move on here to this chart. And if you guys are enjoying the content, if it's helping, be sure to subscribe to the channel and also click that like button. So you can see here, guys, we do have a reclaim from the euro as well. Obviously, we know that the market broke down from its March trend line back here. So we talked about this recently, where you can see from March, we had this trend line down here off of these lows, and we did get the breakdown through here. Okay, so this candle broke down. And as I mentioned recently in videos too, guys, we saw no defense really from buyers here. And that was either a sign, like I said the other day, that was either a sign of a very weak market. Okay, this right here, really no bounce from this key level that goes back months. And this was either a sign of a very weak market or a market that was going to come up here, snap back toward this area and give us that retest. And so far, what I'm seeing from the DXY, I have to lean toward the latter. I have to lean toward the idea that we could be looking at the Euro USD over the coming days, snapping back here toward this area up here to give us that retest of that trend line and potentially clean up those imbalances up there around 117 and 117.36. Okay, so, obviously a bit speculative right now because right now the market is still trading here within this area, within this range. But if we were to see it get above 115.85, we've got an imbalance at 116.16 followed by those two up there that I mentioned. Okay, so right now, guys, range bound price action from the euro and what I would be looking for next week. Okay, so first of all, you can see that this is your range here from back here in June. Okay, so you've got these highs and these lows and these highs up here. So this gives you a range now that the euro has reclaimed this, right? Notice how this was resistance on Thursday. It's now reclaimed this at 114.35. Now we have resistance up here at these lows around 115.85. We've talked about all this before in recent videos. Okay, now a couple of things to be aware of is, first of all, if we look here at, let's say, a 4-hour time frame, right? Based on TPO, time price opportunity, we do have an imbalance down here, a single print down here off of this high. So right around 114.40. Now, the issue here with assuming that the euro is going to come down here to satisfy this area first, in other words, getting something like this next week, is the fact that we have this 115.20 area. Now, this might seem kind of insignificant at first glance because you can see one low back here. However, this right here, you'll notice this says June 8-day composite POC. So what that means is if we go back here to this range in June, what I did is to get this level is I took the 8 days that occurred through this area. Remember, this is the 4-hour time frame. So the 8 days that occurred through here, what I did is I took a composite of that. So I merged those profiles together in TPO, and you get a composite value of the point of control, okay, the most volume traded right there at 115.20. Now, it just so happens that I drew this level before today's bounce, and you can see where right here off of this candle, we did get a bounce so far here on Friday, okay? Now, whether this holds up or not next week, we'll have to wait and see. If we were to get a close below, then I think we're probably coming down here to retest this area as new support, and I would be looking for buys down here in this area, okay? But if we don't, and we just base above here, and then we see the sustained break back above 115.85, okay, then what's next, in my opinion, is that area around 117 to clean up those imbalances, okay? So again, right now, it's kind of up in the air as far as whether or not we get a move all the way down here. Right now, though, I'm kind of leaning toward range-bound price action here, followed by a break above this area. And one reason for that is if you look at the DXY, okay, because this right here would be a pretty significant pullback for the euro next week, and it could happen. Okay, I'm not saying that it can't happen, but if you look at the DXY here and where the current levels are in relation to 99.35, right, this area up here, this right here might not allow for that kind of a pullback from the euro, okay? The DXY, for the euro to do what we just looked at, the DXY would have to come up here and retest this area, okay? Now, obviously, we could get a wick up there, an intraday, move up there in that area. That's certainly not out of the question, but I can't sit here and say that it's likely as of now, okay? So that is that for the euro, guys. And for the pound here, looking at this market, we can see that, we talked about this as well, the 2025 trend line. We did get a breakdown here recently, right? So we saw the market actually break below this back here in this area. So it broke down here, retested through this area, bearish engulfing candle on the retest. We talked about all of this in recent videos. And you can see from there, we did get a sell-off. Now, the pound isn't looking quite as good as the euro, in my opinion, not really as favorable, at least to me. And you can see where, too, we talked about this descending channel off of this high from up here. So you've got these two highs, and you've got this low, which comes in right here around current levels. And this is what I mean. It's not really as clean as the euro. Like right now, the market's hanging right around that key level. So it's not clear as to whether or not it's reclaimed it. If you look at the 4-hour time frame, you could make the case that, okay, right now we have the market coming down here and testing this level down here, right? So if this holds up, then we could get that push up here into those imbalances. But I think that, again, if you're looking for a US dollar short, I'm not sure that the pound is the way to go. In fact, I can pretty much tell you that the pound isn't the way to go. It's not the best vehicle to look for US dollar weakness because of how weak this market has been relative to something like the EURUSD. Okay, so we could get a bounce from here, guys, if this pocket down here holds up next week. So support following that reclaim, right? We could get that push up here into those imbalances, which we have resistance up here at 133.80 very clearly. And just above that, we do have those buy side imbalances. So what we could get if we get the market moving up here is a wick above this high back here and then potentially rotation lower from here. Okay, but first we have to see the pound hold above here into today's close and then obviously on Monday of next week. Okay, so let's move on to the dollar Swiss franc, which should be pretty quick because to be honest with you, I'm not as big a fan of this pair as something like the euro and even the DXY is a lot cleaner than this. So looking here, guys, we do have the market breaking out from this channel that we talked about back here in this area. Now, this is obviously going to be a key support area, which could line up with the DXY down there toward that area we mentioned, or that I mentioned here recently in this video. But again, I'm not as big a fan here of this market. However, we do have at the same time a breakout here to watch down here around 79.20. So depending on when this tests, if it were to test down here at the lows, right, following the breakout, this is going to be your key support. Obviously, near-term support comes in right there around 80.50 today, which is being tested. So far, it's holding up. But, this is looking pretty bearish, right? It's looking pretty bearish for the US dollar. But again, 79.20 is going to be the area to watch going into August. Okay, so let's wrap up with gold, guys, which is a really interesting chart. We've talked about this one before. But you can see here that we did also have a breakdown from this market from the May trend line. So all of these lows back here, guys, we saw a breakdown through here. And like I mentioned recently in a video, hopefully you guys heeded what I said there, because what I was mentioning was that I thought that sellers were going to get themselves in trouble trying to chase this breakdown. Okay, so this right here, we saw the breakdown and we really didn't see a full retest of this level. Furthermore, like I said before, this up here, this entire pocket up here was an imbalance. And you can see this on the weekly time frame, right? We had this and we still have this upper wick from last week. By the time you guys are watching this, so this will technically be probably 2 weeks ago. But you can see that this upper wick back here, guys, in a ranging market, you tend to get markets filling this in. Okay, so anytime you're trying to short a market and you see an upper wick like this, and it hasn't been at least partially filled, there is a risk in trying to short a market from here without seeing the market up here. Okay, that's the bottom line. So right now with gold snapping back to this trend line, what we saw here on Friday was we had this imbalance from back here that we talked about. So the two imbalances that we discussed here recently were 33.51, this pocket right back here. You can see ranging price action. We got the expansion, no retest back here, and we did get that here on Friday. Okay, so this has been satisfied. However, we still have this one back here at 34.04, and this is a big one. And like I mentioned before, I'm not going to go through it in this video because we talked about it before, but 34.04 is also a Fibonacci level based on that upper wick from the weekly chart we just looked at. So there are a few factors that make me think we could get gold coming back here toward 34.04 this month. All right, so the key here for gold, guys, if this is going to be a short in August, is first of all, we have to see the DXY rebound from down here later this month. So if we do get the move lower from the US dollar, it has to find support down here and look bullish in this area. Okay, if we get this and this is important, and gold stays below this trend line. So this level right through here, it has to stay below this on a daily closing basis. If it reclaims this on a daily, guys, then this starts to look very bullish. Okay, so if it continues to stay below here and we get that move, the consolidation here in the rally in August up here toward 34.04, this right here could be an area to potentially short gold. Okay, never financial advice, but that's what I will be looking to do if the market stays below that trend line. Like I said, if it does reclaim it, it starts to look a lot more bullish. Now, as far as key support going into next week, okay, we have on the 4-hour time frame, based on this Friday move, we do have now an imbalance down here at 33.05. So this area down here is going to be your support area for gold. Now, whether or not we see the market get all the way down here first before we get that rally is yet to be seen. And one thing, against that idea would, of course, be the DXY, which is nearly back toward resistance, right? Because the dollar and gold tend to move inversely to one another. So if you're looking at the US dollar index, closing in on resistance, and meanwhile you have gold trading, way up here still, right? That could potentially indicate that we might not see the market down here in this area. Okay. Now, at the same time, though, if you're looking to buy gold, then you really want to see a retracement following this kind of move, right? You don't want to be buying up here right below a key resistance area like that trend line. If anything, again, not financial advice, but you'd be looking for that, push lower first to take out this imbalance next week. And then potentially from there, we get that push up there toward 3404. All right. But like I said, alternatively, we see this market start to reclaim the trend line it lost, and then that starts to look a lot more bullish. All right. So some really nice levels to watch here for gold, guys, going into next week. It's all just a matter of, what is your bias here for this market, and the same thing with the US dollar. All right. So for me, guys, I'm looking for more ranging because that's what we've seen now since April. Like I've said for gold, I mean, really, yes, the macro uptrend is still very much there. However, this has been a very range-bound market ever since April. So I'm expecting more of the same as long as this is the case. Okay. So you have resistance up here, really between 3350, 3360. You have support down here around 3300. And then also that imbalance up there at 3404 that could become a factor later this month. All right. Hopefully this video has helped. If it has, be sure to subscribe to the channel and hit that like button. Don't forget to join us in VIP. Check out that link in the description of this video. Have a great weekend, and I will talk to you again next week.